Hello everybody, Ignatius L. Jackson CPA here with another exciting video from the Ignite Business Talks podcast channel. Thanks for tuning in today. I wanted to talk today about your tax bill. Did you get a tax bill that you didn't like after you filed your taxes here on October 16th, or hopefully by October 16th? Well, if you did, then you might want to check out this video because we might have a way that you can save some money on some of those taxes by implementing a very simple strategy. I shouldn't say too simple, but simple enough to where most people can do it and do it well, save themselves a lot of money on taxes. So go ahead and stay tuned. We're going to be right back in a second, and we're going to talk all about it. All right, everybody, we're back. So thanks for tuning in today to the Ignite Business Talks podcast. Okay, so today we are talking about S corporations. Yeah, look at my shirt. S corps are cool. All right, so today we're talking about S corporations. So we wanted to discuss this because a lot of people probably got a shock. I literally just had a consultation with a group of people who, husband and wife, I should say, and they had a $40,000 tax bill, of which probably about $30,000 of that was self-employment taxes for this last tax year because they did not have their business set up the right way. So their business made about $200,000 of profit, and had they had their LLC stuff in the LLC with the S corporation election, they would have probably paid at least half of that amount in terms of payroll taxes, maybe even more. And that's the whole point of the S corporations. So S corporations save you on payroll taxes. That's the reason why we do them, is to save ourselves on payroll taxes. That's the whole reason why we do an S corporation, to save ourselves on payroll taxes, people, okay? That's the power of the S corp. They're so awesome. They are so cool if you follow the rules and you do it the right way. Now, let's talk about some of those rules, okay? So as a rule of thumb, not an actual rule, but a rule of thumb, you want to have at least $40,000 of net profit before you make an S selection, and you want to have that be consistently happening inside your business before you make that S selection. Reason being is, if you have less than $40,000 in net profit, the benefit of doing the S corp compared to the additional cost of maintaining it and doing it is about the same, or maybe just a little bit greater, okay, or maybe even a little bit less, depending on how much you're getting charged for filing the S corp return, running payroll, etc. Okay, and so we want to make sure we're getting an overall benefit from being an S corporation. So usually that comes out to about $40,000 a year in profit, where it makes sense to be an S corporation. Okay, now obviously the greater that number, the better, because that's the more savings that you'll get, the greater that number is. And so we want to make sure that we're factoring that in. And in order to be an S corporation, you have to have a legal entity. You can't just use your personal name and your social. You have to have a separate legal entity, either an LLC or a corporation. Okay, so you have to form either an LLC or a corporation. We usually recommend an LLC be formed for most businesses, and you use that from the very beginning. And initially, we just treat it as a single member LLC, a disregarded entity, and you just file it just like you would if you were using your personal name. Okay. But when the time comes, when you start making that money, we would then convert the LLC to an S corporation. So that's the benefit of the LLC. It's very versatile. You can start out as a sole proprietorship, and then you move it over to an S corporation later on. Okay. Whereas if you file or create a corporation, you only have two options. You either are an S corporation or a C corporation. And so from the very beginning, you're going to want to probably make that S selection if you created a corporation, in order to make sure that you are saving yourself as much as possible on taxes, because what we don't want to do is have double taxation of a C corporation. That sucks. That's not cool. And so we want to avoid that as much as possible. Okay. And so that's ultimately some of the benefits of being an S corporation. Like I said, save on taxes. Some of the rules that you want to kind of follow as in terms of a rule of thumb in regards to having at least $40,000 of net profit before you get to the point of converting to an S corporation. Now, here's some other rules. Now, these are actually rules that we need to make sure we follow, okay? that first one was just more of a rule of thumb. You can technically be an S corporation when you have below 40,000. It just doesn't make a lot of sense. So here's some rules if you are an S corporation. One, you have to run payroll for yourself as an S corporation owner. Okay, you have to run payroll for yourself. If you're an officer of the corporation, you have to be on the payroll and you got to receive a W-2. The only exception to that would be if there was no distributions of cash or property during the year and the business also didn't make a whole lot of money. I mean, you could justify not having a W-2. If there's no distributions is the key one. No distributions during the year of cash or property out of the business, you can technically not issue yourself a W-2, and there's nothing that the IRS can really do about it because they can only reclassify distributions. They can't reclassify something that you didn't ever take out the business. Okay, so that's one way you could potentially get around having to do a W-2 is if you never take any money out of the business. That said, we all know that people want to get money out of their business. That's the whole reason for having the business. You got to be able to live and survive. So you're going to take some kind of a W-2 9 out of 10 times. Okay, so let's not try to finagle the system a little bit too much here. All right. Number two, you should not be receiving a 1099 from your S corporation as an officer. Okay, you should only, like I said, be receiving a W-2 or you get distributions from the business. You do not receive a 1099 as an officer of the S corporation. Now, if you have another legitimate business that is separate that you're operating, and you're issuing a 1099 to that legitimate business that's a separate entity, then that's okay. But we don't issue a separate 1099 to you as in your social as an officer and owner of that S corporation. Okay. Another rule on that W-2, if you have health insurance that's being paid by the S corporation, then you have to add your health insurance cost into your box 1 wages. It's not subject to it's not subject to Medicare and Social Security taxes, but it is subject to income taxes. And so you have to add it to box 1, and it is subject to withholding based on those prevailing wages. Okay. So that's something you have to do. And then on your personal return, you then take a deduction for the self-employed health insurance deduction on your personal return. So you got to make sure whoever's doing your personal return understands what happened on the S Corp return to make sure everything gets flowed through the right way. Okay. So that's another thing you got to be careful with, and you got to make sure you get done properly the right way. All right. Now, another thing that you have to do when it comes to health insurance is the business has to either reimburse you or it has to pay for your premiums directly. Okay. You can't just pay out of pocket and take the deduction for the health insurance. So, and this is a general rule for all expenses when it comes to S corporations. You either have to be reimbursed or the business pays for the expense directly, whether it's through a business credit card, debit card, bank account, etc. Next rule at the S corporation, you have to file your tax return by March 15th or do an extension and file it on September 15th, by September 15th, okay? You have to do that. It's a different date than your personal return, so you have 2 separate returns and 2 separate due dates that you have to worry about, okay? You do not file your personal return until the S corporation tax return is completed and filed, okay? We don't file the S corp or the personal return until that one is done because it flows through to your personal, and there's even credits at the state level and stuff like that that flows through to the personal, so you have to have that one done before you file your personal return, okay? Another interesting thing about S corporations that also applies to other businesses, but it's a great opportunity, is 401k plans. Make sure you get those put into place before the end of the year to give yourself the full employee and employer contributions. Your employee contributions have to show up on your W-2. So pre-tax contributions, Roth contributions have to show up on your W-2. After-tax contributions do not show up on your W-2, so you can do those after the fact, really, if you wanted to. But any Roth or pre-tax contributions as an employee have to show up on your W-2 as a disclosure on there. Okay, so just keep that in mind as well. All right. Let's see. Anything else that we wanted to touch on today about S corporations? Those are some of the key things. You need to make sure you have your retirement on your W-2. You got to make sure, obviously, you got to get a W-2 by the end of the year. At least do a quarterly payroll for yourself don't just do an annual payroll, do at least a quarterly payroll for yourself. Pay some withholding in there, pay some payroll taxes each quarter. The IRS will appreciate you more for that. Makes it look like you're running it more like a legitimate business, right? Because legitimate business people do payroll more than just once a year. And so do it at least quarterly. Even better if you do it monthly, but at least quarterly, okay? Also, one more thing I'll point out real quick. If you are paying your kids, which is a whole nother strategy, make sure you're not paying them directly from the S Corporation, okay? We want to make sure that we're not paying them directly from the S Corp, especially if they're under 18, all right? If they're over 18, you can technically pay them from the S Corp and it should be fine. But under 18, you want to pay them a different way. Go find another video that I've done on that. We'll go over that more in detail in that other video on how to pay your kids properly when you have an S Corporation. There's a few other rules and stuff that we're probably not thinking about getting into here. But again, have plenty of other videos where we dive real deep into a lot of that stuff. So go check all that stuff out. And as always, don't forget to like, subscribe, and share the video. Subscribe to the channel, like the video, share the video. Leave any comments or feedback at the bottom of the video. Always happy to hear people's feedback, positive and negative, whatever. I don't care. And so happy to always help out wherever we can. And if you have any questions or anything like that, feel free to reach out to us. Our website is out there, as well as our phone line. So feel free to reach out to us with any questions you might have. And otherwise, hope everybody has a great day, great rest of your week, great month, great year, all that great stuff. We'll be back with more great stuff on the Ignite Business Talks podcast channel in the near future. Talk to you later. Peace.